Hello traders, welcome back to my channel. Today I will be explaining an NQ short setup from the 5th of August, and I will explain how this setup gave me a 2.5 risk to reward. I will be, like usual, going through the higher time frame key liquidity point, how I decided the bias for the day, and also all the way down to the 1 minute entry strategy. So let's start. Right now, as you are seeing on my screen, right here, price, wait a minute, right here price took a 4-hour major low. That for me, when that low was taken, I decided to change my bias to bearish. So I will take only short setup. So that was my thinking behind of going to take shorts. So after I decided what the bias is for the day, I will mark my key liquidity points on the higher time frame. As you can see here, I have marked this point here with the circle as one of my key liquidity points. Why? Because right here, and right here, if you notice a little bit, that is like a triple top. So of course above those tops there will be liquidity to be grabbed. So that's why I have decided to mark this key liquidity point here. Let's delete all of these. I will name this key liquidity point 4-hour. And so our job on the higher time frame on the 4-hour is done. I will go down to the 1 hour to see if there were any liquidity points that I could have marked. So for me to show you, but the most near liquidity point was this one here. I will name it 1 hour, and I shall explain when you have two liquidity points next to each other. So when you have two liquidity points next to each other, my idea is that the setup, it needs to take, of course, at least one of them, but then I don't immediately enter on the first bearish candle, but it needs to make like a bearish movement and a retracement and an IFVG or a bearish candle, in which, like always, it needs to take a certain liquidity from the setup that I explained. First, price takes the liquidity, makes a bearish move. In that bearish move, there needs to be at least a bearish candle above the 61.8. When price goes above that bearish candle and forms another bearish candle, a short setup can be taken. It's maybe confusing when I speak it and explain it like this, but it's very easy. I will show you right now. Now, the 1 hour, we are done. Now, the only thing we need to do is to drop to the 1 minute time frame and see how price ticked all my boxes for my strategy criteria, which eventually led me to take the short setup. So now we are on the 1 minute time frame, and as you can see, because, wait a minute, I will name them 4-hour so we don't get confused. The 4-hour, the 1 hour. As you can see, as I have explained a few seconds ago, we have two key liquidity points next to each other. if eventually one would have took the short right here on this candle because it was a bearish volume candle, it would eventually get a loss. So that's why when we have multiple key liquidity points next to each other, we wait for price to make a bearish movement and then a retracement for us to take a short setup, because you don't know when price will eventually turn. So that bearish movement and retracement shows us that price might turn around and offer us a short setup in this trade here. So I'm going to delete the 1 hour key liquidity line in the circle, and I shall explain what we have here. So currently we are on the 1 minute. So as you can see here, price went above my 4 hour key liquidity point that I have marked with this candle here, and also with its wick. But for us, with a wick, with a candle body, it doesn't make any difference, because I only look when price goes above the liquidity point. So it doesn't matter if with a body or a wick, price went above the liquidity point. Then it went above and formed a bearish candle. Then price again made a small bullish move made of these 3 candles here, and then it went again and did a bearish move, this one here. So when I saw this price movement here, price went above the liquidity, made a small retracement, and then again a bearish move. I plotted my fib from the wick top all the way down to this wick low. I have marked the liquidity above the 61.8, which I'm talking about this point here, which I will name lick for liquidity. And once price went above that liquidity, I have waited to see what have formed prior taking that liquidity, which was this IFVG right here. That was the most important part to look for when all the other boxes were ticked, because now we are looking to enter in a trade. So after price took that liquidity, I have marked this 1 minute IFVG, and this price went below it right here. The entry setup was taken. So the setup was taken here. The stop loss was made at this wick high. Let's delete the fib. And the take profit was taken, I take it as usual, at 2.5 R, which is right here. So if, for instance, one would have preferred to take a better take profit, I would have eventually suggested to take it structural, like this point here, and also this point here, because those were the most obvious points of next target of liquidity. And eventually from a 2.5 R, one would have taken or 3.2 or even a 3.8 R. But like I usually say, I am happy more than enough with a 2.5 R, so I closed it at 2.5 and I called it a day. Eventually, if you go on your charts and look at how price moved, you can see that on the left we have this massive bullish move, and eventually price kept going bearish, and from that entry that made me 2.5R, one would have gained around 8R. Let me see if it kept going down. I don't think. Just a little, it went just a little bit down. Would have made nearly 10R, but let's be, how can I say, keep our legs down, down to earth. With 2.5R, I am more than happy, so I decided to close that risk to reward. So, just a quick recap before I end the video. First, we decide the bias for the day, and because the higher time frame took a major low, I opted to go for shorts. I marked key liquidity points on the 4-hour, where I have showed you the triple top, where liquidity was set. I marked that liquidity, and then I've dropped to the 1 minute time frame and just waited for price to sweep that liquidity. After the sweep was done, I looked for my strategy criteria to tick all the boxes. Once the boxes was all ticked by sweeping the key liquidity point, making a bearish move and retracing above the 61.8 of the fib and filling an IFVG, an entry short was good to be taken. So for today's video, that's all. I hope that you liked and enjoyed the video. It was not a hard setup. If you're using this kind of strategy that I am, it was a very simple setup. I hope that you enjoy it, and if so, please leave a comment and subscribe. It makes me motivated to keep doing this kind of videos. Also, you can find these setup on my X and Instagram, and also I post also everything on my Discord for free. So thank you for watching, and I'll see you on the next one.